Hello, everyone. Joshua Hayes at BigWaveTrading.com. I'm going to say something here, and you can take it for what it's worth, but I'm going to remind everybody. I was warning about the rally all throughout 2021 because the IWM showed signs of topping, going nowhere, and lagging, while 5 stocks in the S&P 500 at the end of the year carried the indexes higher. I was warning about the lack of end-of-day quality swings, the lack of performance in those end-of-day swings, the lack of setups as the year went along, and the bifurcation complained about all year long. If you are new to this channel, watch all of my 2021 video lessons. I said then and there, you can't fight the tape. You don't know when it's the top. But I tell you what, we've got a lot of terrible price action. The negative divergences in all the ratio charts that I track and the growth towards value charts that I track started to really deteriorate at the end of 2021. I really started to pound the table about me not liking the way that this last uptrend leg was. Started to see negative divergences in multiple technical indicators. And at the end of 2021, I did a Live Life in Motion podcast and warned everybody, this market looks like it's going to sell off. I'm calling 2022 the year of the active trader, which means I want to get granular in day trading, which is where I've been. And just to let everybody know, day trade every day in the chat room. My day trading accounts are at all-time highs. I have 4 of them. I'm only active in 2 of them. One's for educational purposes. Both are at all-time highs. One is a small cap only, long only, day trade only, break-even stops implemented portfolio that was started at the beginning of October. While the market is down something like 10% from that time or whatever, not quite sure where it's at, I'm up 30% plus in those accounts. So that's a super safe, educational, day trading, long only methodology in a bad market. I tell you that because I know what I'm seeing. I know what I'm reading. And I want to make it very clear. When the market bounced here, 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 I never once got quote, quote, bullish on the tape. I called them bear market bounces. It's possible they could turn into a new uptrend, but via everything that I look at, leadership in stocks, chart patterns, signals, ratio charts, looking for capitulation, looking for Fed pivots, nothing was there on any of the bounce attempts. This recent bounce attempt is the first time I'm seeing positive divergences in ratio charts, positive divergence in growth names, bottoming action in stocks that have been in long downtrends that I have not seen anywhere at any point during this rally. The only problem is in quantitative easing environments, you get V-shaped bottoms, but those V-shaped bottoms almost always coincide with the Fed pivot. We are not in a quantitative easing environment. The Fed is definitely not going to pivot anytime soon. We're going to have more interest rate hikes. So we haven't had the Fed pivot I look for to call a market bottom. We also haven't had an explosion in the VIX, which is super sketchy to me and is the reason why I believe we could still have another leg to the downside. We never got that VIX over 40. There was never a spike in fear. I never saw that spike in the fear either in the equity put call ratio. So I don't have a Fed pivot. I don't have a spike in capitulatory, I don't have a spike in fear, I guess you should say, for a capitulatory bottom. Why do I think it's possible that we're near or at a bottom? There's no volume confirming this move. It looks like another bear market dead cat bounce, especially if you ask me. I'm assuming it is a bear market bounce. In fact, I'm praying, hoping, wishing, whatever-ing you can think of, that we have another leg lower. Because here's why. I sold 50% of my long-term portfolio in the middle of 2021 in anticipation of this sell-off. I should have done that and then sold 100% of it once the Fed actually started to hike interest rates. Next time around, I think I'm going to just do that. I'm going to go 100% cash. But the reason why I only sold 50% and why I only sell 50% in long-term accounts near the top whenever it's clear that things are about to change. Remember, inflation was quote, quote, transitory last June, July in 2021. What a joke. I think it's almost impossible to time the market. That being said, when the SPY got to 400, I began getting to work in my long-term portfolios. When SPY got to 380, I added more. But I made it very clear to everyone, the vast majority of my buying, where I'm going to put another 50% of my capital to work, was when SPY hit 350. I now no longer think I'm going to get SPY 350. If I do, awesome. Thank goodness if that happens. If SPY 350 comes, 50% of the remaining cash in the long-term portfolios will immediately go to work. At 320, another, on the downside, 320, another piece will go to work. At 280, a bigger piece. And at 250, I'm all in. That being said, I no longer think that we're going to get 350 on the SPY. I will now take 360 on the SPY to put 50% of what remains in my long-term portfolio back to work. And here is another reason why. Now I'm going to start showing some things here. So what you're looking at here is the anchored VWAP from the COVID lows. A perfect retest, a perfect test, excuse me, a break below it, and now we're breaking back above it. Well, what I haven't shown here, I don't think it goes back far enough. Oh, it does. Okay, so the 2018 stock market low, the VWAP line is still right around where I want to do the bulk of my buying, 350. However, I don't think I'm going to get that. I think the best case scenario that I can hope for is a retest at 360. If I can't get 360, and let's say that we continue to extend higher, we run into the 50, 100, and if we pull back, I'm thinking maybe we get an inverse head, shoulder, inverse shoulder, head, shoulder for an inverse head and shoulder pattern. And one of the more bullish things that I like to see are patterns within patterns. You know, it's like Inception, but with stocks, a pattern within a pattern within a pattern. If you look at this 15-minute chart, you can see shoulder, inverse head, inverse shoulder, breakout. That's on an intraday time frame. Now I look at the daily, and I can see an inverse head and shoulder pattern possibly develop here if we continue to rally. If we continue to rally from here, I refuse to chase. If we keep going up and we V-ramp and break out to new highs, you're going to understand why I didn't go 100% cash in my long-term portfolio, because there will be nothing I can do about it. I refuse to FOMO and I refuse to chase. I want to enter on pullbacks or proper setups or no entries at all. So some of the reasons why I believe the SPY is bottoming. So we got the inverse head and shoulder. Okay, so we see this low in May on the SPY, right? And we see how it made a new lower low here and then a third lower low here. I want you to look at that chart and compare it to the XBI. The XBI never hit a lower low from its May lows, never even hit a minor lower low. There were no series of 3 lower lows. It's now making a series of lower highs, higher lows, higher highs. So the XBI, as a measure of speculation, is showing that something could possibly be turning here. Another stock, another ETF that I'm watching, ARK. Remember when the SPY hit lower lows and then did another lower low? ARK did no such thing. Higher lows. Now we're about to make higher highs. This is the first time this ETF has not confirmed the market sell-off along with XBI. And then in a quantitative tightening environment, the most important chart to me is J&K. And on that note, it still looks very weak, and it confirmed the SPY when it made new lows. In fact, it led the SPY to new lows when it was making new lows. But in the short term, remember, SPY hit lower lows here. J&K did not. Now, could this just mean it's a bigger bear market bounce than the others? Absolutely. And once again, I hope that's the case so I can get my long-term portfolios invested. And I'm going to remind everybody, on the end-of-day swing side, all it takes is a handful of what I consider really good to great signals, and I can go from 100% cash to 100% invested within a week or less, depending on the quality of the signals, depending on the risk-reward ratio from my buy stop to sell stop. Risking 1R on a stock that only has a 3-cent room from my entry to my stop is a lot different than risking 1R on a stock that has a $4 move from my entry to stop. So it's all dependent on where the stop level is, where you get long, and the quality of the signals. But they're starting to improve. So J&K, XBI, ARC, my ratio charts, and by that I mean like XLY, which I can't do on Telechart, I'm sorry, but you can do this very easy on stockcharts.com. Do XLY colon XLP. These ratio charts. Do small cap growth, small cap value. Mid cap growth colon mid cap value. Large cap growth colon large cap value. XLK colon XLU. XLK colon SPY. QQQ colon SPY. Start looking at all these ratio charts. And what you will see is, for the first time ever since the downtrend started, they are showing positive divergences. So if you look at XLY versus XLP, you really can't see it here, but if you go look at the ratio chart, you'll see that for the first time, and these charts started to lag here. See this move in XLY right here at the end of the year, October into November? Guess what the ratio chart was doing versus the SPY? It was moving lower. Guess what the XLP chart versus the SPY was doing? Moving higher. This is what I mean by ratio charts. So there's multiple charts, and I look at them all. XLK, XLY, XLC, XLF, XLI, XLV, XLP, XLU, XLRE. And I compare them, XLK to XLRE, XLY to XLU, QQQ to SPY, XLI to QQQ, XLI to SPY, XLV to SPY. I look at all of these constantly. And for the first time ever, I have all of these ratio charts, some of these laggards like ARC, XBI, all of these speculatives charts showing me that the market wants to turn. So is that enough to think that we've bottomed? Absolutely not. Do I have enough evidence to say that we bottomed? Absolutely not. Where's my capitulation panic low? Where's my Fed pivot? It's not there. I'm just talking about a bottoming process. I'm going to say this one more time. I need and want the SPY to move lower to continue to add to my long-term portfolio. If it does not, the Fed pivots, keep getting my good charts, which we're going to end the video lesson with. I'm going to go run through a whole bunch of charts that are showing me, hey, it's not as bad as everybody thinks it is out there. Then I can get fully invested in the quarterly portfolios again come August. The long-term portfolios, I can wait for the next round of pullbacks. For instance, that inverse shoulder, head and shoulder pattern to add to it. And the end-of-day swing side, I've gotten some signals this past week. The ones that I'm flagging and not taking on my end, like always, it's quantum mechanics. It's the observer effect. It's the double slit experiment in real life trading being done. But, you know, I told everybody, IKNA, this is a chart I would go long in any other market, just not this tape because of other reasons that you don't see here. 44% gain in 2 days. I'm still offering trades like this. Now, the trades that I get myself into, they don't seem to be working quite so well, but I'm still giving these trades as options to everybody. So once again, part of a bottoming process, not calling it the bottom, but here's more reasons why I think we could be there. This is not a secular bear market to me. This is a cyclical bear market and an overall secular bull market. The 200 weekly SMA has always been my guide. You crack below the 200 weekly, you find resistance at the 200 weekly, and you roll over, now you're in a secular bear. You crack the 200, you find resistance at it, you're in a secular bear. But in cyclical bears, you find support at the 200, you rally. You find support at the 200, you rally. You find support at the 200, you rally. This did look scary in COVID 2020, but what happened? We reclaimed it and we rallied. The closer we get to this 200 weekly SMA, which, by the way, where does it happen to line up with? 350. Not making the stuff up, guys. 350, 360. This is where I'm looking for. I'm praying that we do go lower because I won't have any skin in the game. The few end-of-day positions I have, if we keep going lower, I'll take tiny cut losses on them, continue to focus on the granular day trading, and wait to add to the long-term portfolios because I've been warning about the sell-off since 2021, started to sell off in the long-term portfolio in the middle of 2021, did a podcast at the end of 2021, and anyone that's a member of Big Wave Trading knows that I was looking for the market pullback going into 2022, and I called it the year of the active trader, meaning day trading. Now, here's more reasons, now that we got the 200 weekly SMA, why we understand why this is a cyclical bear market, in my opinion, not a secular. And if it is a secular bear market, you normally don't go lower than about 30. The worst case scenario in a cyclical bull market, I believe, ever was a negative 37% decline. I have the statistics right now in my chat room under a chart tab that I have charts. I have a little historical graph here, and it looks like, and I'm right, the worst cyclical bear market was 38% 1968 to 1970. The average is right around 24%. We're there. So here is the final reason why I believe we're closer to a bottom than not. In a secular bear market, the one thing I never see ever are stocks hitting new highs or stocks close to new highs. Look at all of these stocks that are hitting new highs, that are near new highs, or that are building out nice consolidations. LI, new high. VRTX, new high. HURN, new high. Eli Lilly, new high. Go, new high. CYTK, new high. FCN, new high. FNKO, new high. UTHR, new highs. Guys, I guarantee you, if this was a real bear market and if things were going to get extremely ugly, you're not going to see any stocks hitting new highs except for commodity-related names. Even these medical and food stocks, I believe, would not be hitting new highs if the economy was so bad. And besides that, here's some other leaders that I really like the way they look. GTLB, this recent IPO. Higher lows, breaking a downtrend line, higher highs. I like what I see here. SWAV did hit lower lows here, but look at this nice move off the lows. I like the way that this thing looks. Is it actionable? Probably not. SHLS, like the way this is looking. Potential new leader right here. PRVA, potential new leader right here. Think about what the market looks like. Why do these stocks look like the way that they do? And then for a bottoming one, I'll admit to everybody, I added this name last week to my long-term portfolio, but at the beginning of the week, there were two stocks I decided I wanted to really increase size in. I did in one of them. All members know what it is, and all members know that stock is rocking since the ad last week and the bigger ad on Monday. There was one other stock I wanted to add on Monday, and I didn't. And you're looking at it. I messed up. I wanted to add to my long-term portfolio. So now you guys already know that I got snow in my long-term portfolio. But I really wanted to add to it here. But instead, there was two stocks. I only added to one of them. Whoopsie daisy. So now I have to wait for a pullback. But here's another example of a stock. Downtrend line. It's breaking out above the downtrend line. It did hit new lows, but this look here looks different than any bounce you've seen in this stock during the entire downtrend. We're now above the 50 SMA. We're breaking a downtrend line. This is brand new. Okay, guys, long enough. We're hitting the 20-minute mark. That is the max that I let these videos go. So I will go and wrap it up there. Guys, if you need more from me or want to hear more from me, check out the description below. We run a 2-week free trial, bigwavetrading.com. Nobody's ever complained to me about the service. We cover all time frames, from granular day trading to the broader long-term portfolios. We have end-of-day swing trading, quarterly portfolios in between there. There's a link to 2 podcasts I've done recently. Check them out. See if anything that I'm saying is not what I said then. On top of that, always posting on socials, but mainly it's not a whole lot. It's just kind of an overview to tell you that what we're doing is working at bigwavetrading.com. All right, everybody, have a wonderful rest of your weekend. Let's get them on Monday.